Want to get in on a hot IPO? You might want to think again, and not just because of the poor track record of many recent IPOs. Hello, I'm Sheldon McFarland, Vice President of Portfolio Strategy and Research at Loring Ward. After Facebook went public, many investors were ready to unfriend the stock. It debuted at $38 per share on May 18th, and by August sunk to about $20 per share, a drop of almost 50%. Many investors lost money in the deal, and some may not have even known that they owned Facebook. A surprisingly diverse group of mutual funds lined up for Facebook shares. More surprising and potentially disturbing for investors is that many of these funds, given their investment objectives, shouldn't have bought the stock at all. For example, a dividend growth fund bought Facebook shares even though the company doesn't pay a dividend, and a foreign large blend fund bought in even though the fund's prospectus states that its principal investment strategy is to invest in non-US stocks. The Facebook IPO debacle highlights an issue that investors need to keep a close eye on in their mutual funds: style drift. Style drift is when a mutual fund doesn't stick to its stated investment objectives. This can be a real problem if you're trying to maintain a consistent asset allocation, dividing your portfolio among several asset classes with specific percentage targets for each. After all, do you really want your US small cap stock mutual fund manager to buy large cap European stocks? Then there's the problem of overlap. If your US large cap manager, US small cap manager, and foreign stock manager all buy Facebook shares, are you really diversified? Finally, what's the most devastating effect of style drift? It can make your portfolio much riskier without you even knowing it. Imagine you want 60% of your portfolio invested in bonds, but your bond manager decides to invest 50% of the bond fund he manages in stocks because he wants to try to increase his fund's returns. Now you've got a portfolio with only 30% bonds and significantly more risk. Style drift is one of the reasons building portfolios using asset class mutual funds may be a good choice. These are mutual funds that invest in asset classes or specific segments of the market like US small cap stocks. The fund's goal is to stay true to its investment mandate and not try to beat the market or chase hot stocks or hot sectors or trendy IPOs, so you always know where you stand. The next time you review your investment portfolio, be sure to check for style drift, because fund names, like Facebook relationship statuses, can be misleading.